Well, in this lecture, I will spray some light. I will spray some light on the topic of accounting principle. In accounting principle, there are number of items, but today I will focus on two main important principles. One is the accrual principle and another is the matching principle. So what is the accrual principle and what is the use of actually the accounting principles? And for understanding the double entry problem, the accounting principle should be understood. Should be understood because this, on that basis of the accounting principle, you should have a proper control on the double entry. So the first is the accrual principle. In the accrual principle, the transaction in a period should be in the period should be in a such a way that the expenses suppose in a month, and the related cash should be paid or received in the same month. So what is the understanding of the accrual principle? Accrual principle is that transactions are recorded when they actually happens, not when the related cash is received or paid. So with an example, we can have a clear idea. Suppose that you have a business, and in that business you have used electricity. In the month you have consumed some electricity and you have paid cash for the using of the electricity in the month of December. So in November you have consumed and you have paid in December. So according to accrual principle, the payment, whatever cash you have paid, should be considered in the month of November, because you have expensed electricity in the month of November. So here is the accrual principle, and according to accrual principle, transactions should be done in the transactions in actual period, and not when you have received the cash or paid it. So this is the understanding of the accrual principle. Now the matching principle. What is the matching principle? Matching principle, in case of matching principle, revenue and cost should be adjusted in the same. So revenue and cost. So by an example you can understand it. Suppose we have a business and you have bought some dresses, and after designing the dresses you sell it out. And so what has happened? If you have bought 10 dresses from the market at rupees 10 per dresses, then you have spent 100 rupees. per day is 10 rupees, and you have bought 10 dresses. So 100 rupees you have spent. This is the cost. But in the period, you have sold 5 dresses, and after designing, whatever designing you like to put in on the dresses, so after completing all those things, you have sold the dresses in the market, and for each dresses you have 20 rupees. So you have sold 5 rupees in the period. So one dress, the price of the one dress is 20 rupees. So 5 multiplied with the 20 is 100. So this is your revenue. What is your cost? You have bought 5 dresses with per dresses is 10 rupees. So 5 multiplied with 10 is equal to the 50, and you have earned 100 rupees. So 100, that is the revenue, minus 50, that is the cost, is your profit. But if you consider the 10 dresses, the total number of dresses, the cost of the total number of dresses as a total cost, and subtract this from the revenue, that is 100, by selling 5 dresses, it will be not the correct thing, because matching principle is not used here. So if you follow this accounting principle, that is the matching principle, then you should consider the number of dresses you have sold, and number of dresses you have sold, the price or the cost of the same dresses. That is, you have, in our example, you have sold 5 dresses, so you should consider the 5 dresses, cost of the 5 dresses, not the cost of the 10 dresses. This is the matching principle. So revenue and cost should be adjusted in the same period. So these 2 principles I have discussed today, and that is the accrual principle and the matching principle in the accounting principles. So I hope you have a clear idea over these 2 matters. So thank you for watching this lecture.